All right, traders, happy Wednesday to you. Welcome back to the Tier 1 Trading live trading room. As mentioned yesterday, we're going to do a little bit of a special session today as we head into the holiday weekend. I don't have much interest in the market today, haven't looked around at all. We do have a data dump of news events since tomorrow is a U.S. holiday. So we have some of the Thursday events coming out a little bit earlier. We also have some FOMC minutes coming out later today. But seeing how we're heading into the holiday, just want to get together and do a little Q&A for you guys on the platform. We do this on a regular basis, but for those who are watching out there on internet land, on TradingView or YouTube, where we live stream usually the first trading opportunity today, I want to give you guys a chance to come in and see if you had any questions that maybe you wanted to ask me that perhaps you didn't have a chance to ask before. So I know there's a little bit of a delay in the live stream, so we'll get you guys going. Obviously, Tier 1 members, you can ask as well. I'm going to sip some coffee and we'll see what comes through, and it could be anything related. And if not, we'll get you guys out of here and we'll start our weekend. Or midweek, kind of early weekend, I guess you can say. Afternoon. I was thinking about the FTB this morning. Have you done your England versus USA prediction? Yes. Yet. Yes, I have. I think we're going to get sloshed. I think it's going to be bad. I think it's going to be bad. I wouldn't be surprised if it's like a 3-0 defeat. Now, I hope we win. But I think it's going to be pretty bad. We got exposed pretty bad by Wales, and Wales is a team that has no interest in controlling the ball, no interest in attacking. They don't really have any great attacking threats. I mean, they got Gareth Bale, who can always score, but he's not the same Bale we've seen before. And they gave us trouble. England has a lot stronger attacking side. You've got some monsters up there. You've got Kane, you've got Saka, you've got Sterling, you've got Foden, you've got Grealish, whoever else you put up there. And the runs that they make are a lot different than the runs that Wales made, and I just don't have a lot of confidence in us. But I hope we do. I hope. I think the way to play it is old school American soccer, where in the Wales game we had to take the offensive approach because we had to be the more aggressive team. I think we play the way that England likes to play, right? England likes to sit back. I say we sit back and let's see what happens. I would be happy with a tie. We can't afford a blowout. That's the thing, though. But I could be wrong. I tell you, we have some threats. So I hope we just take advantage of the few opportunities that we get. Hey, Coach, how much money would you say you make on average per trade? No idea. It really varies on the size of the trade and what I'm looking for. So stuff like advanced pattern formations or just, let's say, counter trend traders in general, or counter trend trades I take in general, are going to have a much smaller profit margin because I'm looking to be in and out of the market. I'm either looking for, in a sense of a pattern formation, I'm looking for a decompletion to hit, and then we're rolling right over to a target level. So if we look at the pound yen, like we took a look at yesterday, right? If we take a look at this cipher pattern, for example, let me just clear up my chart a little bit. So if we look at this cipher pattern here on the pound yen, I'm going to give you a great example. In fact, I probably should just load up my Ninja. Give me a second to load up my Ninja Trader chart and I'll get to you. It's going to make life a lot easier for you. But really hard to say because, again, it really depends on the type of trade. Counter trend trades in nature are going to have much smaller profit targets than continuation trades. Home run trades, going even within the continuation trade category, home run trades have a much higher profit potential than regular trades. So it really depends on the situation. It also depends on the risk for the situation as well. But let me show you an example real quick of, I want to bring over pound yen here. I looked at this yesterday just to kind of make life easier with the software. What are we looking at? 240. We can have a cipher pattern like this forming, right? And we can see this is, I consider advanced patterns, unless you're shooting for anything a home run, this is going to be a counter trend move. So I'm looking for a short move simply from this point right here. Sorry about that. From this point right here, back down to here, right? Let's say this were in a continuation setup, right? So if we were looking for a continuation setup, let's say we break and close above these highs. Now, all of a sudden, it's an entirely different trade where we're looking at a move back to here and then a continuation up for higher targets. You can see continuation trades are typically going to have a higher profit target just by the nature of your going with the path of least resistance, right? You're going with the flow of the water. So typically you're looking for a bigger move because you're trying to catch an extension. In a counter trend move, we're looking to catch a pullback, which is going to be a shorter move. So it all depends on the situation at hand. You can also look at it from a perspective of pair by pair, right? We spoke about this during Monday's Q&A where we talked about rules for different patterns. The pound yen, which we call the beast, typically has a high ATR. Now, if you're using a set risk percentage, it's going to be the same no matter what. Meaning if you say, hey, my risk is always, I always risk blank percent of my account, blah, 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 right? But you can see a small move, right, like this is actually nearly 300 pips. While we can look at the same type of move, right, same type of time duration, a 4-hour chart on, say, like a dollar Canada, and it could easily be half that. Or she says also, give me a second to sip the coffee. You can remind them that you don't do fixed percentage. Yeah, so I don't trade a fixed percentage position size, meaning that my position size is not always 1% of my account or 2% of my account or whatnot. It varies on the trade because I used a smooth ratio money management position sizing strategy to maximize my profits in the market. That's a lot of words for no reason. I use a money management strategy, a position sizing strategy, to be a little bit more aggressive of how I grow my account. And because of that, although the average risk and position size fits into a similar category, the monetary size is going to be a little bit different each time. Sorry about that. I got all wordy. I should have just gave the simple answer. So hopefully that answers the question for you. If not, we can dive in. Let me just go back up here. We got a scammer on there. Someone says I look good in my pics. I have lips and dreamy eyes. Oh, thank you. Ooh, easy. My wife's right upstairs. Gosh. Speaking of defeat, do you still secretly suffer from losses? No. And yes, I lose. I lose all the time. Do I suffer from losses? No. So losses, right, were something that bothered me at the very beginning stages of my trading. And like many traders, right, when you first start off trading, every time you take a loss, you take it personally. So every time you take a loss, you automatically assume that, oh, it's because of me. I did something wrong in the market, blah, 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 blah. What you understand as you spend more time in the market is that losses are nothing more than part of business. So if you've ever ran any business or been in a business, right, they always take losses, whether it's on day-to-day stuff, whether it's on returns, whether it's on items going missing, whether it's spills, right? There are always losses. There is a cost of doing business. And in trading, losses are your cost of doing business, right? Nobody has a 100% win percentage in trading. No one ever will, right? Trading, right? Professional traders work off an edge. They work off probabilities, meaning that, hey, I know that the likelihood of me winning is blank. They know that how, hey, out of every 100 trades, I should win 70 or 60 or 40, whatever that number is. So because that number is not 100, you have to accept in your mind that, hey, I'm going to lose. Now, the thing that we need to work on are what type of losses do we take, right? Are we taking natural losses or self inflicted losses, right? Natural losses are losses that naturally come in the market. They're part of the plan, they're banked into your business plan, blah, 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 blah. Self inflicted losses, those are the ones that are caused by our error. So think about it like an employee that keeps, a waitress, for example, that keeps dropping dishes, right? That's due to their error versus, you get a bad batch of milk or something that comes in, right? So we want to avoid the losses that we create. That's the main thing. Those are the ones that I will get upset about. That is very rare with me. I can't remember the last time that I've made a trading mistake. I miss trades every now and then. That does happen, but I can't remember the last time I've made an execution mistake, meaning I've entered a trade I'm not supposed to, or I've exited early, or stuff like that. It's had to be years. Aside from the only thing I'll still make time, every once in a while is I'll make a mistake with like stop loss placement. Either I'll get lazy and I won't see a level of structure, or like I'll enter the wrong number or something like that. I still do that from time to time, but I haven't made a trading mistake as far as like entering something I'm not supposed to be in, probably in the last like 4 or 5 years, if not more than that, to be honest with you. So I take losses. Do I suffer from them? Not at all. Not at all. I invite them because every loss brings me closer to that next win. Mickle says, pound Canada approaching a good level for bearish continuation, question mark. I'm going to need a little bit more information. What time frame would you like me to look on for that? I don't mind looking at the pound Canada, but to answer your question, I need to know a time frame because pound Canada on the daily chart may be completely different than pound Canada on the 1 minute chart. So whenever we are talking about pairs, guys, we have to give details. And I used to see this a lot on the internet where people would yell at each other, where someone posts on Twitter, for example, euro dollar is bearish. And then you get like 80 people coming in saying it's bullish, it's bullish. And you got 80 more people coming in saying it's bearish and bearish. And meanwhile, no one actually gave a time frame, right? So you can have 18 million traders out there looking at 10 different time frames, all arguing, and no one actually knows what they're looking at. And all of them could be right. So we always want to give a time frame because there's no, just like there's no trend, there's no such thing as a bullish or bearish trend. It's only a bullish or bearish trend based on the duration that you're looking at. So we always want to make sure to give that. So let's go to pound Canada. You said daily, looking pound Canada approaching a good level for bearish continuation. Let's see. So we got pound Canada like this. We can see our structure shelf in here, right? And that's the level where we're kind of approaching. So I would say this. For me, it would not be approaching a level for bearish continuation. And there's going to be a few reasons for that. One, with the rejection that we saw down here, I have no belief that we're likely to continue lower. Let me just check on where that rejection comes in at the weekly because I'm not too familiar with this pair. But based on that hold right there, I don't have any reason to think that we're likely to continue lower. Just give me 1 second here. Delete and see what we're looking at. So here's our low right here on the weekly. We never got a break and close below that low. Yeah, so our last move down on the weekly here was a hold of structure. We did not violate structure. So because we didn't violate structure on the weekly nor on the daily, there's no way I can predict a continuation lower. So it goes back under the whole kind of IPDE thing. Identify, predict, decide, execute. Where mainly in my analysis, what I'm looking for is I'm looking for levels of structure. and I'm looking for how price reacts at those levels of structure. So if price action comes to a previous level of structure support, in this example, this is called a decision point where the market is going to make a decision. If we hold that level of structure and retrace off of it, then it means counter trend. If we violate it, then I can make the prediction that we're likely to go lower. So in this specific case, both on the higher time frame, the weekly, and the lower time frame of the daily, we did not violate that level of structure. So I cannot predict that we're likely to go lower, as this is going to be a hold of structure. Add to that, after the fact, we actually violated the previous outside return as well, right? So we look at price action coming here, sloppily drawn on, sorry, and we go there before we retrace. And you can see that we've actually come up. We've rotated, meaning that we've put in a higher high, higher close above that level. We've retraced. We put in another higher high, higher close above that level. We put in another higher high, higher close. We're putting our third higher high, higher close above that level as well. So I cannot be looking for a bearish continuation. Do I think we're coming into a level where we may see a bearish trading opportunity? Sure. Yeah. I think each time we hit these inside levels of structure, these levels of structure right here, these outside levels of structure, excuse me, these are certainly opportunities where you can look for bearish trades. So again, right here, you can look for bearish trades. Right here, you can look for bearish trades. If we hold right here, you can look for bearish trades. But I don't think we should be looking for bearish continuation trades. You should be treating these like counter trend trades where you're looking to get in, looking for a very short move back to a previous level of structure, and then get out. I just don't see any reason to project that price is likely to continue all the way back down here and test those levels based on what we're seeing with the technicals. Good question. Give me 1 second. I want to finish this coffee. It's getting a little bit lukewarm and I hate it. I like it when it's hot. Let me just finish this up real quick. But good question. All right, what else do we have here? Is it recommended? Sorry, I had to delete the spammer. Is it recommended to continue feeding your trading account despite going through losing streaks? For example, you're growing your account by putting money into the account, but losing almost every trade. That's another good question. So let's put a pause on that real quick. I want to make sure there's not a follow up on the pound Canada. I'm bouncing back and forth, so I want to try and stay on topic. But let me see if are there any follow ups on the pound Canada question about the analysis I did, or about with trend, without trend, why I'm not seeing it as a trend, structure, anything like that. I don't want to go to another question and come back to this. I want to make it somewhat viewable and less confusing for you guys. But any questions about that? Live rumors? Any thoughts on pound Canada? Are you guys seeing continuation, counter trend, or stay out? Anything from your end? I like having different eyes on the market. Or she says, can't see continuation. Yeah. And again, it could be how we're phrasing things. That's why I hate the word continuation or counter trend, but sometimes we mean the same thing but phrase it. All right. So no follow-up questions on that. If you end up getting one, just type it in. I'll get to it. Is it recommended to continue feeding your trading account despite going through losing streaks? For example, you're growing your account by putting money into an account, but losing almost every trade. Well, the first thing I would ask is this. Do you have in your trading plan, right? Because a trading plan is our business plan, is a document that is our, for lack of a better comparison, it is the Bible of our trading, right? Every answer, right? You know, they say every answer should be in the Bible. If you want to answer for something, look in the Bible, right? If you want to answer for anything in your trading, where should it be, guys? It should be in your trading plan, right? And if it's not in your trading plan, should you do it? No, you should not be doing it. So part of our trading plan is not just the rules of engagement and the technical stuff. It's not just the psychological stuff where it's like, I am a good trader, I will do this, blah, 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 blah. It's not just your routine. It is your business plan as far as your money management. So in your trading plan, there should be a section that tells you, how are you going to continue to grow your account? What are your rules for adding money into your account? right? We've spoken about a handful of different ways to do so, right? Are you going to take an approach where it is performance based, where it's like, hey, if I have 3 consecutive months of positive results, whether you're judging positive results off of being profitable or process based positive results following your plan, then I add money to my account. And how much do you add? Is it monthly? Is it weekly? Is it daily? Is it annually? Right? There's no wrong answer there, but it needs to be in your plan, right? So you shouldn't just be recklessly adding money to your account whenever you want. You can end up in a very dangerous place. And in the example that you gave, right? When you're on a losing streak, what is the number one emotion? Or I guess what are there's two emotions. What are the two emotions that typically slap us in the face when we're going through a losing streak? What would you guys say? What are the two biggest emotions that typically slap us in the face during a losing streak? Who can tell me? We're either one of two things or we're both. One is going to be fear. Yep. We are scared. We are losing money. The ship is taking on water. We are drowning. What is the other one? Fear. Fear is one. What is the other one? The other one is revenge, right? You can kind of team revenge and greed together. But revenge, right? We've lost all this money. So what do we need to do right away? We need to make it back, right? It's no different than the casino, right? You take a loss at the casino, what do? Double the chips, double down, right? So being in a fearful state is bad. Being in a greedy or revenge type state is even worse, right? And we do dumb things when we're emotional. So to put yourself in a position where you've lost money, you have this need, this desire, this urgency to make it back, you can get into a lot of trouble because now you're taking money from somewhere else. You're flooding it into your account so you can trade a bigger position size so you can make up for what you just lost. And what typically happens, right? You end up losing anyway, but now you lose more, right? So we don't want to just emotionally push money into our account whenever we want to. It needs to be a business. It needs to be according to our plan. Your trading plan needs to say, I can only add money to my account on the first of each month. I can only add money to my account after I reach this milestone, right? Maybe after I reach this number in my trading account. We shouldn't be doing it whenever we want. That is a very bad idea. Because the time that we want to do it, it's either going to be during a period of fear and revenge, where we're coming off a losing streak and we have to make more, or it's going to be coming off a period of overconfidence, where we're on a winning streak and we're saying, oh, if I had more money in my account, I would be making more, right? We need to be consistent, just like every other aspect of our trading. We need to stick to the plan. Very good question. Very good question. Now, at the same time, if you're going through a losing streak and you're supposed to be adding money to your account, right? That's just, your process. Yes, you should be doing it. You shouldn't be fearful, right? If you're using proper money management tactics and risk management tactics, if you add money to your account, right, it's probably not changing much anyway, because you're still working within your normal risk profiles, right? Obviously, it depends on how much you're adding. If you're doubling your account, then your position size is going to change. I'm assuming that you're not doing that. But yeah, like anything else, you want to have a plan. That is something that is usually not spoken about, not talked about, but it's a very important part of your business plan, of your trading plan. But you can't let emotions take over, and you can't let emotions cause those decisions. Good question. Let me go back to Akil for advanced patterns. At what point do you decide? Oh, we just answered this question on Monday's Q&A session. Akil, for advanced patterns, what point do you decide that the move has already been made? For example, if we come 5 pips before the completion point, but it reverses and not violates X. For me, it's by whatever I front run. So depending on the time frame and the pair I trade, I either front run by 5 or 2. If we come within that margin and then go back down and hit targets, or would be targets in air quotes, the move has already been made and I'm no longer interested in taking the pattern. So for me, it's 5 or 2 pips depending on the pair and depending on the time frame, since that front running does differ depending on time frame and pair that I'm trading. Then it's gone. I just accept it. I cry a little bit and then I move on. I shed a single tear and then I move on to the next. I right click, delete, delete drawing tools, and go on to the next bit of analysis. Jose says, Akil, do you use any dashboard to see all the fundamental information, inflation, retail sales, to make trading decisions? So I'll typically look at Forex Factory is my go-to, just because it's a habit. So I'll go to Forex Factory. I had it open earlier if you guys want to see. I'll go to Daily FX as well because there's a little bit more shiny, and I get bored with how things look every once in a while. But I use this as my economic calendar to see what's on the agenda for the day. I typically look at it at the beginning of the week and note down big, the major events I need to pay attention to. So like, again, obviously this week's a holiday, but like FOMC minutes, those are going to be a big one. Any type of big inflation news nowadays, interest rate decisions, those are going to be a big ones. And then I look at it before each trading day to get a rundown to see what we're looking like hourly by hourly. Now, as far as trading decisions, I'm a technical trader. So I don't base any of my trading decisions based off fundamentals. So I don't look at these fundamentals. I don't try to guess and interpret and make put a position on in the market because of it. Mainly what I'm looking for is, when do I need to be aware? When do I potentially need to avoid the market? So for example, if I were trading today, my trading would shut down at about 1:45, right? And my trading would resume at about 2:15, or actually, I don't know if there's probably no press conference, but yeah, 2:15. So if there's a high impact news event, I don't want to be in the market while that high impact news event is going on, because the markets are going to act more irrational than they usually act. Markets are always irrational, but they're going to act even more irrational. So I want to avoid them. Now, every once in a while, I will be in position for a home run trade, meaning that my technical analysis lines up with my fundamental projection and prediction. If that's the case, then sometimes I'll hold on to a position longer if I believe that the news event or the reaction to the news event is going to be in the same direction of my trade. That is very rare, but you get stuff like that. Like early in the year, the yen news was an easy one to trade. You get that from, not to go too deep into it, but you get that from deviation from the expectations. So when the market doesn't really think something's going to happen, but you believe that based on your research, there's a good chance that it will happen, that's when you get kind of the bigger moves that push the market further in your direction. So I don't trade off news, but I do pay attention to the calendar just to be aware of what's going on, to be aware of when I need to perhaps avoid the market, or just to answer any questions where it's like, hey, you may be trading and the markets go crazy, and instead of getting all mental and second guessing yourself, it's very comforting to understand, like, okay, I know we got this movement because of flash services. I know that they'll probably go crazy for like 5 minutes, but then we'll be back to normal. And if you're sitting in a trade or waiting for a trade, just knowing that information in the background can be very helpful, because a lot of the times when things move very, very quickly, we tend to panic. We tend to make emotional decisions. And usually when we make emotional decisions, they're not the correct decisions. Akil, why do you think it's so hard to be successful in trading? Sometimes I feel like it's hard to depend on it as a source of income. I mean, as a career. Because most people aren't willing to do what it takes. The thing with trading is this: it does take a massive amount of skill, right? You have to be skilled. But the thing about trading skills, it's different than like athletic skills, right? To be a professional athlete, right, you need to hit the genetic lottery. Like, I don't care who you are, you need to hit the genetic lottery, right? You need to be born with a certain amount of speed, a certain amount of height, a certain amount of physical attributes. And then you need to work really, really hard to maximize those just to have a chance to make it. With trading, right, we need to work really, really hard to maximize our skill in trading, but anyone can do it because we don't need physical attributes. Now, the problem is that most traders aren't willing, or most people in general, not just trading, but in anything, most people aren't willing to do what it takes to be successful in anything. And becoming successful means making a massive investment, right? A massive investment in your time, a massive investment in your energy, a massive sacrifice with friends and family and whatnot. Um, and you have to put in a massive amount of work over a very, very long period of time before you can become successful. I had this in the beginning of my trading plan, and it still is in the beginning of my trading plan, where I said, I believe that the main reason people fail is simply because they give up before having a chance to succeed. Meaning that a lot of people think you're going to be successful right away. Like I'm going to pick this up and do it in a week or a month. Um, Anything of value typically takes a lot of time. And in trading, we're talking about a year, 2 years, right? Before you start to really see success. Most people aren't willing to suffer that long to get through the storm. So they give up before they give themselves a chance to be successful. Um, so that's why I think it's very hard. I think there's so many things that the expectations are wrong. So many people have a unrealistic expectation of how long it takes to be successful. So many people have an unrealistic expectation of what success actually means. I can't tell you how many traders I've spoken to who would be very successful traders, but they don't think it's enough. I spoke to a guy the other day who is making like 40% a year, right? Or at least his numbers say that he should make 40% a year, but he won't actually follow through because in his mind, he should be making 40% a month. And I'm like, dude, like you're a successful trader, or like you have the potential to be a successful trader, but because his expectations are so high and unrealistic, he's never going to achieve that mark. So there's a lot of people like that as well, where they think trading is this get rich quick scheme where it's like, I got to make 30% a month or I suck. And the honest truth is, if you can make 30% a year, you're doing very well. Um, so that's another problem as well. People kind of sabotage themselves mentally just because they have the wrong approach, or they take the wrong approach, or they have the wrong expectations. Or she said, many people expect the consistent returns day by day. Yeah. I was speaking to another trader yesterday who was like, hey, what are your daily results? So like, I'm like, I don't know. Like, I don't even take a trade every day. Like, I don't know my daily results. Like, I don't look at stuff like that. Well, what are your weekly results? I don't look at stuff weekly. Like as a swing trader, as a day trader, I would look at stuff weekly and monthly, right? As a swing trader, like 3/4, right? Look, I can lose for a month straight in swing trading easily, right? It's not about it's bigger picture, right? The only results that really matter to me are the annual results, because I know that trading is a game of ebbs and flows, ups and downs, and you got to give it time. Good question. I would also say this. Going back to expectations and your question about a source of income, I think we have to be realistic with how much we can make off of trading as well, right? A lot of people think that, hey, I'm going to go full-time trading and have it be my only source of income. And when you actually realize how much money it takes or what percentage return you have to gain, I think it's going to be an eye-opener to many. Now, there are different, is it possible? Yes, I have done it, right? I have done it by growing my business in different ways, right? Started off managing money. So, right, I didn't have enough money to go full time when I first learned how to trade. So I made a business out of it. How can I manage money and make money that way, right? I do education now as a supplemental form of income. I started doing education, 2012. That takes the pressure off of trading results as well. Now you can grow your account without taking everything off to feed your family. So having those correct expectations are key too. We got a few messages. Retract it. Thank you. How do you balance your portfolio with stocks, Forex, or any other financial instruments, knowing the leverage of Forex? I look at them as two different approaches, right? So my stock investments are that. They are investments. They are long-term investments. They are buy and hold. They're nothing that I need to manage on a regular basis. Forex for me is active trading. So Forex is the only market that I'm actively trading. I'm actively going into each day looking for new trading opportunities. Can you do both with both, right? Can you be a Forex trader and a stock trader? Yeah, right. It'd be no different than balancing a normal portfolio, right? You just need to make sure you're not overwhelming yourself. And you need to make sure you stick to your rules, right? Again, that's the brilliance of having a solid plan, right? If you have a solid trading plan and you have the ability to follow it, you shouldn't get overwhelmed. It should be simple, right? You just do what the plan says, right? It's like an athlete, right? I loved being an athlete because my job was simple, right? Just do what my coach told me to do. Here are the plays, do them. Say no more. I don't have to think. So same thing. You just don't. People get overwhelmed and people get confused when they don't have a plan. That's the problem. When they have freedom to do whatever they want, that's where they get overwhelmed. That's where they start doing too much. That's where they start getting confused. That's where they get analysis paralysis. Have a plan. Stick to your plan, and it makes life so much easier. It's the same thing with like budgeting, right? Personal finance. So many people struggle with personal finance simply because they don't have a plan. Like when that paycheck comes in, do you know what to do with it? Is 10% going to charity? Is 20% going towards spending? Is 40% going towards bills, right? Or are you just doing whatever with it? And people get into financial trouble because that paycheck comes in. They're like, I'll just do whatever with it, right? But if you have a plan, right, or if you have it automated so it spreads out in different accounts, it's pretty simple. Boom, check comes in, 10% here, 20% there, 40% there, 20% there, 10% here. Boom, done. It's not overwhelming because you know exactly what you're going to do. You just have to do it. Don't worry. I work with FTMO. Making 2 to 5% a month is all you need. Yeah, you make 2%. If you can make 2 to 5% a month, you're one of the best. You're considered a good trader, and I'd put you up in that category, right, as one of the best traders. Again, people underestimate what 5% a month looks like. I would encourage you if you're someone that's out there poo-pooing making 5% a month, right, consistently, right. Doesn't mean every month, but like on average 5% a month. I would encourage you to load up an Excel spreadsheet. I would encourage you to put a starting account in there. And I would encourage you to go row by row and see what your account growth looks like making an average of 5% a month. And I would do it for at least 2 years, right? Because you're not going to be excited in your first year, but do it for at least 2 years and look at your results. And then do it for 8 more years. And I think you're going to be shocked at what 5% a month can achieve you. You're going to be very shocked. It's going to come out of nowhere. Like, how the hell did I get that? Because it compounds, and it compounds very quickly, like anything, like a snowball. It starts off small, but as it gets bigger, things start to really explode. And you don't really start to see that explosion. 2 years is typically where you start to see it. After year 2, you're like, wait a minute. I did what? But again, going back to what we talked about earlier, right? People don't give it 2 years, right? If they don't have it in 2 months, they quit. If people don't have it in 2 months, they quit. Good stuff. Good stuff. Good questions, guys. Anything else? Anything else before we shut it down? I got to buy some sneakers. Or she says I got to buy some food for Thanksgiving. And it's 5% a month, risking 1% per trade. I think your return depends on what you risk per trade. So your return doesn't depend on what you risk per trade, right? It doesn't need to, right? You can, but you want to pay attention to what you risk per trade in comparison, in forms of, or I guess in terms of knowing your maximum allowable drawdown, knowing your total risk, right? So people take these numbers and like, I got an email the other day with someone like, what is your return on this divided by that? I'm like, these numbers are pointless. Like, who cares, right? The thing about your return compared to your risk is, right, there are other pieces to the puzzle that aren't necessarily being calculated, right? So, someone would easily say that risking 10% on a single trade is ridiculous, right? Would you guys agree? To risk 10% on a single trade is ridiculous, right? I think anyone would agree that. But let me ask you guys this. What if, and this is obviously a stretch example, what if you were a 90% trader? What if you are a 90% trader? Is 10% still horrible? Right? You see how it depends? Now, again, what are the chances of you being a 90% trader? Probably slim. Realistically, you're more like a 50% trader, 60% trader. So in that case, right, 10%, that is a massive risk. But it depends on the other figures. It depends on the other data points, right? risk is important. I'm a big believer in keeping your risks small, but it also depends on the type of trader you are. It also depends on your average drawdown. If you've done historical testing and you've traded for 80 years and you've never had a losing streak more than 3 trades in a row, and let's say your maximum allowable drawdown is 30% and you're a 90% trader, well, you can risk 10% and be pretty comfortable with it. At the same time, you're someone that's streaky, you probably want to risk less. So we don't need to get caught up too much on, well, what's your risk, right? That does matter because we see all types of weird stuff out there from traders who, curve fit and they show a significant amount of profit and they blow it the next week because the risk is too high, right? That does play a role, right? But putting those jokers aside and thinking about in the professional realm of things, right? We're assuming that we're operating where we're not busting and blowing accounts. So in that case, your risk could depend on how good you are as a trader. The people that are just out there trading as much as possible so they can show you like a big number, they can be like, hey, I made 100% today. We don't even involve those in the conversation because they're not real traders. They're not real traders. What do you do to avoid looking at your active trades? Any tips, advice, coach? It's very tempting. Yep. Top of your screen, there's a little minus button up here, right? If you're using a Apple, maybe a little bit different. I hit that minus button and boom, it goes away. Boom, simple. To avoid looking at trades, I hit the minus button. Screen goes away. Don't even see it. It's gone. It's like it never existed. So that's the easiest thing you do. Other tactics, just leave. Go outside. Go for a run. Go for a jog. Go for a bike. Get away from your charts, right? Unless you have to watch it, unless you are, a day trader who's maybe actively managing it, unless you have to watch it, just don't watch it. Just get away. Out of sight, out of mind. Right? It's the same thing with like food, right? When I'm here in the office all day and I'm near my refrigerator, right? I eat a lot because it's right there and I'm always hungry. When I'm out of the office, when I'm at meetings or I'm gone for like 8 hours at a time, I can go 8 hours without eating. Why? Because it's out of sight, out of mind. Fridge is not there. I'm not thinking about it. I'm distracted by other things. So it's got to find other ways to distract yourself. Other ways to distract yourself. Do not let him leave. Yeah, well, we are leaving. We've been here 45 minutes. So you guys had some good questions. Yeah, so you enjoy. Yeah, that's why there's no food for tomorrow. I ate it all, RC. Exactly. You guys enjoy the rest of your week. I will see Tier 1 members. I'll see you guys Monday for the Q&A. The rest of you guys, I'll see you Tuesday for our live stream here. Hit that like button on the way out. Do me a favor. If you have any other questions that you wanted to ask, type them in the comment section below. I go through all these videos, so I'll address them that way. And until then, plan your trade your plan. Take care.